And let's start right there with your calls for 3 cuts this year and 125 basis points in the first half of 2025. Can you help us and our audience understand whether that's an adjustment based on falling inflation or whether that's a shift to accommodation to confront weak growth?
More the first. If we really see weak growth, which is not our baseline, but, 50s are in the picture. The 50 story is a very, a typical recession fall off a cliff story. We don't expect that, so we have 25. So I think as we get into 2025, with the unemployment rate drifting up and inflation getting closer to target, all the considerations of, how tight should real interest rates be matters. So that's why we think that they'll be able to cut more aggressively and bring the Fed funds closer to neutral in the first half. I think the Fed would prefer not to do it in 2024 because they want to be sure we're still on track for, getting target inflation, and they want to be sure if they do a 50 that the economy is in dire straits. But by 2025, they'll be more confident that they can do an isolated 50. We don't think it's going to be too many of them.
Steve, there are two very different conversations, though. There is a key distinction, and you've drawn it. The conversation about removing restrictiveness and a conversation about shifting towards accommodation. What does the dollar look like? How does it trade in one backdrop versus the other?
Yes, the dollar is kind of interesting. We thought that the dollar would, because we're at saying 25 basis points. The market was somewhere between 25 and 50 in Q4. So as the market pulled back from those rate cut expectations, we thought the dollar would strengthen. What we've seen so far is that the asset markets and the currency markets are paying attention to the ebullience that you're seeing in equities. And, that's kind of been driving the dollar weaker, even though the interest rate moves have been more in favor of the dollar than against it. We have to see if that persists. There's still a long way to go before we entirely get rid of the, 100 basis points, get back to 75 that we expect. So we as a baseline, we still think the dollar could nudge stronger. But 2025, we think, will be a weak dollar year because that will be, all systems go to basically get back to neutral. The Fed will converge with everybody else in rates terms.